Hello, good morning, ladies and gentlemen. How are we all doing this morning? I would like to confirm that we are good to go this morning. I've been having some technical issues, and I actually need some confirmations that you can see my screen and that you can hear my voice before I kickstart the session. I'm trying to see, I want to know if things are already sorted out at this point. I would like to see some comments, please. I would like to see some feedbacks that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get this started. Ladies and gentlemen, how are we all doing this morning? Technical issues, and I have to need some confirmations. Okay, I can see Legiono. Dele, I hope I pronounce your name correctly. Thank you for that confirmation. So I will be taking that as a positive feedback to kickstart the session. All right. I'm so excited to be here this morning with you guys as we're going to be taking a technical dissection of the current market structure. I hope you all had a wonderful weekend. So, to get kickstart the session, the first thing we normally do at the beginning of the, the day is to ensure that we have a better understanding of what the fundamental perspective of the current market is in order to be able to position ourselves in such a way that we can catch any potential opportunity both during the UK and the New York session today. So as usual, the first thing we are going to be doing this morning is to take a look at the economic calendar and see if we do have a macroeconomic event to look out for today. And in fact, if you had watched my videos, which I published during the weekend, I laid more emphasis on this, but it's very important that we also look at this one more time. And so for Monday, we really do not have any events, so we're definitely going to be looking at the current market structure from a technical standpoint, and with the hopes that we can be able to identify the potential drive in anticipation of the major events coming up later in the week. So with no information, with no fundamentals on the calendar for today, let's dive into the current market structure to decipher what our next line of action will be for today. So I already made some updates on my TradingView platform. If you had been with me on my TradingView platform, you will see that I have done some update this morning in anticipation of the trading session. So on the US oil this morning, we are going to be looking at what is really going on in the chart. Our participants in this market reacted to the current market structure. Remember, I told you, I shared this with you in my videos where we saw our price action has broken out of the $76 level during the course of the later part of last week's trading session, and I'm of the opinion that we want to see price action continue to trade above the $76 area for trading opportunities in this market. And I also laid emphasis on the fact that the $76 level will be our yardstick for trading activity for this week. That is, as long as price remain above that $76 area, we will be comfortable in our buy position. However, if price action drops below that structure, then definitely we want to be anticipating a selling opportunity. Now, with the look of things, now look at what has happened on this chart since the beginning of the week. You can see that the week has started on the bullish with a bullish gap. As you can see here, price action closed at around the $76.70 level on Friday, only to open at around the $77.10. So for me at this point, this is a bullish gap, which is a sign that we might be having a bullish momentum. Well, it's not all the time that this kind of situation happens, but from a theoretical perspective, we should be expecting that price might likely continue to the upside. Now, in order to capture this current market structure so that we can have a better perspective of what is going on here, I was able to identify a channel between the $77.20 area and the $76.50 level. And as you can see here, price action has been trapped within this channel since the beginning of this week, where the resistance level sits at the $77.20. That was the highest point price has ever been for this week. As you saw, as soon as price gets into that level, we begin to see sell pressure, reject attempt by the buyers to break out of that structure. Then we also have the support line of this channel sitting at the $76.50 level. And if you look at what is happening here in the last 6 to 7 hours, price action has been trading in the upper side. So we have higher lows here as price action is finding it difficult to break below the previous low here. So I'm of the opinion that we might be tending towards a bullish momentum going into the first phase of the new week, following this bullish gap that we have here. So in that regard, I'm going to be having a buy stop order sitting right above the $77.20 level, with the hopes that price action will be breaking out of that structure. And if that happens here, then definitely we want to be joining that bullish momentum to the upside. And if possible, price action does some retest of structure followed by buying pressure above this level, we'll be welcoming additional position to our existing trade on this one. So this is what I will be looking forward to buy the US oil for today. So I'm looking forward to a breakout of that $77.20 area to join that bullish move to the upside. However, in as much as we are looking out for buying opportunity here, we cannot ignore the possibilities that sellers might likely come in this market. Remember, throughout the course of last week's trading session, I think through the later part, throughout the course of last month, price action has been bearish on the US oil. So we want to see if a breakdown of the $76.50 area happens from this current market structure, then we might likely be seeing price action drop to the downside on this one. So we have the simple flat channel we shall be using to guide trading activity for today, but be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update on what my expectations are, if there are any surprises besides what I have just explained here. If you have any questions, feel free to drop your inquiries in the comment section so that I can attend to them appropriately before I move on to the next pair. Okay, Mahan, I saw your comment just lately. Good morning to you. Trust you had a wonderful weekend. Okay, so we shall be moving on to the next pair, which is the GBPUSD. And on the GBPUSD here, this is the situation we have on the 1 hour time frame. Now, it appears that price action has been quite bullish since the beginning of the week here. As you can see how price started this new week at around the 1.20350 level here, and we have been witnessing some engulfing bullish candle which has taken price into the 1.21050 level. So this was our initial resistance point for this week. As you can see here, when price action got into that structure, we saw some selling pressure bringing price back to the downside. And if you remember, if you recall what happened during the later part of last week, we also saw selling pressure around that 1.21050 level. Price action dropped to the downside, price was unable to break the previous low, and this was a sign that we might be having a bullish momentum in this market. And what did we see here? We saw an engulfing candle doing a final breakout of that resistant line. That was I think about 6 hours ago we saw this bullish move to the upside. But one interesting thing about this current structure is that as soon as price got into the 1.21400 level, we begin to see some selling pressure resume in that market. And if we look at this current market structure from a technical standpoint, we know that whenever we have a breakout of structure like this, we expect that one point in time price is likely going to come back to do a retest of the structure in anticipation of another wave of bullish momentum. Now, with the situation we have right here with the structure, the resistant line at the 1.21050 level, we want to see price action do a retest of that structure. So what this simply means is that we want to see some buy pressure resume right above that structure, and buy pressure will always come in the form of a rejection of that level by the buyers. So you can see the selling momentum coming in. Yes, we want to see a situation where price continue to reject that level, unable to break down that structure to give us a clue that we might be going bullish at this point. Now, if price action breaks down the 1.21050 level, there is a trend line here which has been a major determinant of price action since last week's trading session, which I identified during the early hours of today. As you can see, it's more or less of a bullish trend line, though it was initially rejecting bullish attempt, but since the breakout of the structure here on Friday, price has been trading above that structure. So if it so happens that price action breaks down the 1.21050 level here to the downside, then we can wait at this bus stop here along the bullish trend line to see how price action will be reacting to that structure to decide if we are going to be buying. And what we want to be seeing around that area is a form of bullish pressure, that is buy pressure around that area on our lower time frame, so that we can join that trend continuation to the upside. So if price action breaks down the 1.21050 level like it appears to be doing right now, and then we have no choice than to wait and see how price action will be reacting to this bullish trend line. So if that happens, price comes into that structure, we see buy pressure above this level, then definitely we want to be joining a bullish momentum to the upside. So from this current market structure, the only way we are going to be buying the GBPUSD is to see price action continue to trade above the bullish trend line that I just identified here. Now, if it so happens that the bullish trend line is breached, that is price action breaks down the bullish trend line at any point in time, then this will be a beautiful signal that we might be seeing a momentum shift anytime soon. But one thing I would like to state here is that we don't want to get too excited by joining right away or having a sell stop order below that trend line. No, that is not what we want to be doing here, as we need further confirmations to happen before we want to be joining that bearish move to the downside. So if at any point in time we sight a breakdown of the bullish trend line, we want to see price action give us further confirmations in the form of a retest of structure, that is price coming back to do a retest of the trend line, or it could go as far as retesting the 1.210500 level. But the most important pattern we want to be seeing here is selling pressure in the form of a reversal pattern on our lower time frame, where price action finds a lower high. Then we want to be getting ready to join that decline to the downside. But there is no cause to worry here. I will always give an update in the comment section on my TradingView platform as price action evolved into any significant structure at this point. But right now we already have a pattern here. We already have a structure which we're definitely going to be using to guide our trading activity for today. So let's wait for this candle to close this current candle. It appears price action wants to break down the 1.21050 level. So let's see if it does. If it does, then we wait to see how price action react to the trend line here in order to decide if we are going to be buying or selling the GBPUSD for today. So that is my view here on the GBPUSD. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the next pair. I would like to state here that if you are not following me on my TradingView platform, please do, so that you can be able to see my updates in the comment section of this GBPUSD publication on the platform. And if you are already with me, flag the pair by clicking the flag button. Let me show you what that looks like. So if you open any of my publication on the TradingView platform, you will see a flag button at the bottom of your screen. I think the bottom right hand side of your screen. This is it right here. So once you click this flag button, it will give you, oh sorry, they've taken away this flag button. That is not it. They've taken it away right now. I can't find it anymore. Okay, so just try to follow me, and I'm sure you'll get notifications as soon as I drop an update in that regard. So I always drop it every hour, so you can always check in that publication to get a follow-up detail on that. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. Alright, so the next pair we shall be looking at this morning is the XAUUSD. And so you might be wondering that I'm not looking at the higher time frame. Yes, I am not looking at the higher time frame because I have already discussed about this in my videos on my YouTube channel, where I shared with you the technical perspective from an holistic point of view. So what we simply do on the live morning session is to reveal the lower time frame in anticipation of the trading session. So if you want to have a look into how we got to this point in the market, you might want to watch the videos of this instrument in the description box below. The links are in the description box below. You might want to watch them so that you can have a better perspective of what we are really talking about here. So on the XAUUSD, look at the structure we have identified on the 1 hour time frame. So in the video I published during the course of the weekend, I told you how important the 1860 level is for us on the XAUUSD. And this level, I said, is going to be our yardstick for trading activity for this week, that as long as price remain above that structure, we might be tending towards a long-term bullish momentum on the XAUUSD. And during the first half of last week's trading session, we saw how the dollar rose significantly well, and this was as a result of the hawkish statement from the Fed's chairman, who is leaning towards a rate hike, and he have said that if the economic indicator for the US continues to become strong and positive, they will have no choice than to increase the interest rate so that it can curb the inflation. So that is what he wants to be using to curb inflation. And as a result of that, speculators priced the US dollar at a 0.5 basis point, a 50 basis point, hoping that the rate hike will increase. And as a result of that, we saw a huge spike in the dollar in the first phase of last week, after which we started seeing some profit-taking activities where the dollar relinquished all of the profit back into break-even. Now, the situation we have right now, it doesn't seem the 50 basis point is looking visible anymore, considering the NFP result that came in last week. I think about 315,000, which is not as much as the previous month, and that is more or less a sign of a slowdown in the economy. And we are looking forward to a 25 basis point in this point. So we want to be seeing how the market is going to be reacting to these fundamentals. And since the beginning of the week on the XAUUSD, we have been seeing a situation here where price has been doing a consolidation phase between the $1,895 area and the 1,869. And with this kind of situation that we have here, you can see after price action got into the 1,895, we saw a sharp rejection of that level. As you can see, we had a candle here that looked more like a shooting star candle, and from a technical standpoint, this is a sign that sellers are still very, very strong in this particular area. So at this point in time, we need to be very, very patient, as we want to see price action do a breakout of this channel to give us an opportunity to either buy or sell the XAUUSD for today. So right now, what we are going to be looking forward to buy the XAUUSD is in fact to see price action do a significant breakout of the 1,895 level, taking out all the sell positions here. Then if there's enough liquidity around that zone, we shall be seeing something like a retest of structure followed by buying pressure around this area on our lower time frame to give us an opportunity to join a trend continuation to the upside. So we are only going to be buying the XAUUSD if price action breaks out of the $1,895 level. However, if the contrary happens and price action continues to nosedive following the sell pressure, that is the multiple rejection of the 1,895 by the sellers, then a breakdown of the support line here, taking out all the buy positions here, is likely going to be giving us a selling opportunity. But one thing about this current structure is that we are not going to be joining right away, simply because of the bullish momentum that we witnessed during the later part of last week's trading session. And with a further breakout of the 1,860 level, if price action continues to trade above this area, it's more or less a sign that we might be going bullish in this particular market. So if price action breaks down the 1,869, we don't want to jump into that bearish momentum right away, as we need further confirmations to happen before we want to be joining that decline. And the confirmation will definitely come in the form of a retest of the structure at the 1,869. We want to be seeing some selling pressure right below the structure, signs that buyers are finding it very, very difficult to break above the 1,869, after which we could have a sell stop order at around the 1,860 to join a trend continuation to the downside. And if a further breakdown of the 1,830 happens, we definitely want to be adding more position to our existing trade. So this is the only way we want to be joining a decline to the downside from this current market structure. But if we take into consideration the breakout of the 1,860 and the bullish momentum we have witnessed here in the later part of last week, there is a high chance that price will be going to the upside. And we want to be positioning ourselves just right above the 1,895 level to join that trend continuation to the upside. So let's be on standby for these opportunities as we continue to monitor price action. But be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update on what my expectations are, if any sudden market structure evolves at any point in time. So I will be going on to close for today with the USDJPY. So we have 4 pairs that we are monitoring for this week as usual. And on the USDJPY, remember we had this significant breakdown of that strong demand zone last week. Remember we had a strong demand zone at around the 135.800 level, which has been a strong demand zone in the last 3 to 4 weeks now. And during the course of last week's trading session, we saw the significant breakdown of that structure to the downside. And since then, price action has been trading below that structure to further emphasize the strength of the sellers in this particular market. And if we look at this current structure from a technical standpoint, you all know that whenever we cite a breakdown of a structure like this, we expect that one point in time price is likely going to come back, do a retest of that structure with the hopes that it will be going to the downside. Now, with the situation we have here right here, look at what has been happening since Friday. We can see our price action has been trapped within a channel between the 135.100 and the 135.600 area, where it's a sign here that price has been indecisive. Participants still don't know what will be happening for this week. We are waiting for a catalyst to give us a signal of where price action might likely go. So we might likely see a situation where price will probably come back into that 135.800, that level that was a strong demand zone earlier, to incite another wave of bearish momentum. So let's see what is going to be happening for today. We might be in for a long consolidation phase in this market, which might last about 48 to 72 hours before a significant traction comes in this market. And considering the fact that we have this week list with series of macroeconomic event, definitely we might be seeing some consolidation phase in anticipation of this event. So let's be on standby on this one. So for me personally, I have a sell stop order below the 135.600 with the hopes that if a breakdown of that structure happens, we want to be seeing a sell momentum from that area. And with a buy stop order here, I'm not going to be putting a buy stop order at this point. And the reason why I just explained earlier is because of the significant breakdown of that demand zone. And remember, price is sitting below the current demand zone here. So I would want to see some further confirmation before joining the breakout of the 135.100 level. And this might likely come in the form of a breakout first of all, then price action coming back to do a retest of structure. Then I want to see some liquidity, which will reflect on the chart in the form of multiple rejection of that area by the buyers to incite another wave of bullish momentum here. So that is the only reason why I'm going to be thinking of buying the USDJPY here. Please note what I just said here. We are not having a buy stop order yet. We want to see price action do a breakout of that structure, retest of structure for further confirmation, then we could join that rally to the upside. Now there is one thing I just saw here after citing the sharp rejection of the 135.600. You can see that there is a sharp rejection around this area, which is a sign that we might be having a bullish momentum. So we might likely be possible to join that bullish momentum early enough. So in order to do that, I have identified this after bringing out our line chart here. You can see we have a structure here which looks more like a pennant, and if we connect the series of lower highs here, we have something like this. Let me make this a little bit thicker so that we can it can be clear enough for us to see here. So we have the situation here. So what I will be looking out for at this point, so that we can actually join that bullish momentum even before it gets to this point. So if it breaks out of the trend line, remember, you're not jumping right in. You want to see some retest of structure by pressure above the trend line on our lower time frame. As soon as price breaks out of the trend line, we want to be scaling down to our lower time frame to look out for buying pressure above the structure. Then we want to be joining that rally to the upside. So then if a breakout of the 135.0 level, you could have your buy stop order above that structure. So these are my views here on the USDJPY. So I'm looking forward to buying opportunity if price action does a breakout retest of that trend line. However, if price action drops below the 135.600, we already have a sell stop order right below the structure to join that decline to the downside. So these are my views here on the USDJPY for today, and I hope I was able to simulate all the possible scenarios that might likely come in from this current market structure as we head into the UK and the New York session. Then don't forget to follow me on my TradingView platform, as I will always be giving you an update in that regard from time to time as price action is being monitored. So I look forward to seeing you same time tomorrow, 8:05 a.m. UTC, as we get prepared for the UK and the New York session tomorrow. Do have a wonderful day, everyone, and I hope to see you in the comment section as we continue to monitor price action. Bye bye.